Hey everyone, welcome back to the Your Money, Your Life podcast, episode 274 of the pod. Make sure wherever you're listening, you like, subscribe, you five-star, you rate and review this podcast because we have a lot to discuss. First and foremost, we're going to jump into the market update. Let's give a little update on the market and what has been swinging our way so far. Uh, we've again, it's been more interesting, more volatility and more interest in the market, I would say, in the last, few weeks over what's going on, trade war. We've talked about all those items in depth. So let's go back into the chart and see. Look, things have gotten better. People like telling us the world was over and crying and like not too long ago. I do think this is sort of a bull market trap here. I don't think we've seen the full bottom yet. We're now just getting into, we saw that the GDP from last quarter, first quarter of 2025, was the first time we've had a contraction in GDP. Let's look at that. GDP, let's see if we can contraction. So the US economy shrank during during the first quarter of 2025. GDP slipped 0.3%. So we're actually seeing for the first time a slowdown in economic activity. So real gross domestic product grew or contracted at a rate of 0.3 percent on a quarter over quarter ceasing adjusted annual rate, according to the Bureau of Economic Analysis. This is the weakest growth of the this is the weakest economic growth for the U.S. since 2022, 22's first quarter. And consensus economists forecast pegged last quarter's real GDP growth at 0.4%. So they actually thought that it was going to grow about half a percent. And that's a stark decrease from the prior period's expansion of 2.4%. So it's clear economic slowdown is here. You have job loss, you have people spending less, people worried about different things, and so that's so clear to me. And so the technical recession, as we've talked about it many times, is when economic output, excuse me, contracts over consecutive quarters, meaning a negative reading during the second quarter would indicate a recession or a downturn. Technically speaking, that's what it would be. And so the National Bureau of Economic Research defines a recession as a significant decline in economic activity that is spread across the economy and lasts more than a few months. So more than a few months is one quarter, more than that, so 2 quarters of contraction, negative growth, that would be a recession. So that's the interesting. I say all that to say this, you know, even with all that said, I've said this last week, the market is the leading indicator. So the market priced a lot of that in. Let's look at the 1 year chart. Again, people were crying in 2025, said the world was ending as we went into February, March, April, we hit bottom, April 7th. We've bounced back considerably from that. We've had some bumpy roads and we still bounced back considerably. We haven't fully gone back to highs, but it will eventually. That's obviously very clear to me. If you look at just the year to date, the S&P 500 is only down 5%. Again, people were saying the world is ending. 5%, 6% down year to date. One in the last month, we're up a percentage. And the last 5 days has been the biggest, increase in the market. We're up 3.32% over the past week. And the futures today are pointing to a little bit of a higher opening. So I say all that to say this, the market's the leading indicator. The market might have already priced that in. But again, I don't think it's over yet, because we still need to see what's going on with trade deals, what's going on with all the indications of why we went into why the market contracted. Was the trade deals, the trade war? We haven't seen a deal announced yet. There's rumors of a deal being announced soon uh, by the administration, but we haven't seen that yet. So maybe the market's pricing in some of those deals. And if it doesn't come through, we're going to see more volatility ahead. That's 100% true in my estimation. So let's look at what CNBC is saying this morning. They're saying investors fear that President Donald Trump's tariffs and downturn in the U.S. economy would threaten the AI trade. They were assuaged after Meta platforms posted stronger than expected revenue in the first quarter, with Meta's chief Mark Zuckerberg saying on the call that the business is performing very well. So that's another thing. We have earnings coming out, and tech is doing really well. Tech is a little bit siloed and guided away from some tech is from some of the trade war. I mean, it's software. Like that's different than products, physical products, a lot of cases. Microsoft also had a strong earnings. They said their Azure cloud business is doing well, and it was up more than 8% in pre-market, while Meta shares gained 6% pre-market. So a lot of the tech stocks are coming out with their earnings and saying, hey, we're doing well. We don't need to worry about the trade war. We deal in software, we deal in tech. Um, but there was some other economic news that wasn't so bright. We had bullishness, of course, through the earnings of tech, but it was dented a little bit by the jobless claims. Weekly jobless claims came in at 241,000. That's more than the estimate of 225,000. That jump further exacerbated these concerns about an economic downturn. So we saw the GDP contract, and some of that output that's calculated in GDP is, of course, workers' output, all these different things. You're battling these two things. You have techs that have strong earnings, and then you have tariff talk, and then you have economic slowdown via jobless claims going up way more than expected. That's a tricky situation. But again, the market is going to be more volatile going forward. We've seen these past week a jump over the past week. And again, look at the volatility in the past month. That wasn't as volatile of a period as we're seeing now, right? And so that's to be watched. Let's speak more about these jobless claims. For the first time, filings for unemployment insurance total a seasonally adjusted 241,000 for the week ended April 26. This is up 18,000 from the prior period. Continuing claims, which run a week behind and provide a broader view of layoff trends, rose to 1.92 million. This is the highest level since 2021. So this is very clear that there's job market is softening. Very, very clear data here. Um, Much of the gains seem to come from one state. Interesting. New York, where claims more than doubled up to 30,000 on an adjusted data. District of Columbia, which had seen a sharp increase earlier this year amid President Trump's efforts to trick the federal government, saw a modest increase last week. So it's breaking it down by state and region about where it's seen the most. So interestingly enough, that's interesting data to kind of collect. Let's go into the current news and see if there's anything that catches our eye in the current news update. So Tesla, there was a rumor out that Tesla's board was looking for a new CEO. Tesla quietly began to explore finding a replacement for CEO Elon Musk last month. This is according to the Wall Street Journal. The report is citing anonymous sources. This is per the journal that the EV maker, the board, enlisted the help of several executive search firms in light of sinking first quarter sales. It's unclear whether the search is still ongoing. Tesla's chair, Robin Denholm, has denied the report that the directors are highly confident in Musk's stability. I don't. So that's interesting. The board, which again Elon reports to as a CEO, he's probably could be on the board too. But again, the board is consistent of multiple people, and they have the ability to vote and do different things, including replace the CEO if they get enough votes. Potentially there's a rumor floating around that they're looking to replace him because he's not as focused on Tesla as he is other things. Apparently, it seems like, and Tesla was going through some tumultuous times when that report came out, the Tesla stock did decrease or it to pull back, I should say. The price decreased just based on the fact that the investors feel like he's the best to run the company and they would not want to shake up with the CEO. So they denied the report, of course. I think, of course, the report's true. It definitely wouldn't have gotten out there if it wasn't some smoke fire where there was smoke. For them, it's gonna. He's seems to be more of a vindictive person. So whoever did that or whoever was on the coup side, they got to watch out. He's definitely gonna try to go after them. I'm assuming. Um, yeah. So we'll see what happens if they do a shakeup or if they keep him in. We'll watch that. But we'll also watch the backlash that may come from it. Eyeball scanning tech lands in the US. A startup co-founded by OpenAI chief executive Sam Altman is introducing eyeball scanning technology to 6 US cities this week. Tools for Humanity will roll out the Orb device designed to prove someone is real human and not an AI deepfake in locations that include San Francisco and Atlanta. It's important expansion for the company whose technology has already been used by 12 million people in countries. So, okay, so this is a project to identify if someone's real versus AI. Interesting. Okay, I kind of like it. So they're using it to identify if people's real versus using the AI on. dating apps on different things. I guess they have a partnership with Match Group to verify Tinder users in Japan. They use eyeball scans. Are people able to like hop on video as an AI and like just talk to someone else? That's probably, of course, true. And so now we have to verify this. That's pretty interesting. I'm actually really interested in that technology. Technology is good. We got to keep it makes our life more efficient. We can use it for many, many different things, as of course. In the banking world, bankers are denouncing 110-hour work weeks. Junior employees at Midwestern Investment Bank Robert W. Bard endured long, grueling hours that leading to two people being hospitalized. This is reported by the Wall Street Journal. The details of the working conditions became public early this month when an anonymous post on Wall Street message board went viral. Former employees on Bard's industrial team said they routinely worked 110 hours per week, describing the demands as unsustainable. Over a dozen junior bankers have left the firm since the start of 2024. I thought banking was going to get easier with AI. You just plug in the formulas, all the modeling, pitch deck stuff. It's so much faster, right? I guess I'm wrong. These people are still working good hours. A lot of it is just FaceTime that you have to just be in the office for no reason, waiting for someone to give comments on it. That's unfortunate. Um, yeah, it's tough for those folks. I always like to keep up on what's going on. So I guess they're still working those grueling hours in the office every day. That's not fun. We'll keep an eye out on that. And we talked about Microsoft's AI cloud growth already, but there was a more pointed report that they had it stronger than expected quarterly profit and revenue as artificial intelligence helped fuel sales growth of 33% its Azure cloud computing business. LinkedIn parent stock jumped in after hours trading. So yeah, the tech companies did do well. Total revenue climbed 13% to 70 billion and exceeded the 68.5 billion that they projected. That's incredible. Another good earnings for them. Again, tech companies again had a strong first quarter. It looks like we'll see if that continues to go through. Was there anything else that we should discuss? Google had a banner quarter as well, as we talked about the tech, tech companies and their quarter. First quarter earnings per share up to $2.81. This is well above the estimated $2.01. YouTube's Q1 ad revenue grew 10% to 8.9 billion. Cloud revenue up 28% to 12.3. The search business, of course, still doing strong, 50.7 billion, up 10%. Advertising revenue, another 66.9 billion, 8.5% increase. So man, they're all their businesses moving and grooving, it looks like in the first quarter. Um, Man, we're seeing a lot of companies do well in the first quarter, but is that a lag? Can the guidance is guidance telling us that they'll still do well? I think for tech, you may see that. For other product companies, not so much, or even other tech companies. Imports are about to collapse at America's busiest port. The tariffs on Chinese imports to the US mean that companies are turning off the China to US trade spigot. But like a garden hose that wraps halfway around the world, it takes some time before the water stops flowing on our end. So yeah, the trade wars, some of that impact still hasn't come through yet. We're going to start to see it. It's just getting started. So that's another another wrinkle to this that we haven't fully digested just yet. So there's a lot. There's a lot going on. We've touched primarily on most of the things. Let's look at our question of the week today. We're talking about government. What are the three top expenses the government paid for with our tax dollars in the most recent year? Then we've gotten a question like this before. I said it was like health, which I accidentally saw the answer. Health, military, social services. I don't know. Health, of course. National defense, second, of course, and social security. I said social services, social security. I was good. That was good. I didn't see the last two. That was just using the brain. And okay, so our 2024 budget was 9.7 trillion. And yes, Social Security was up there, National Defense, Medicare. Don't, yeah, we pay for Medicare, yeah, of course. Interesting. Health, defense, and Social Security. Well, those are good things, right? Right. Medicare budget is at 1.5 trillion dollars. Think of the trillion word, man. There's a lot of dollars. A lot of dollars. Question of the day: what are the odds of getting at least one job interview if you submit 1 to 10 applications? 1 to 10 applications. So are we saying we do 10 or one? That's a big difference. I would say one interview, 110 applications. I would say at least one interview, right? Oh, what are the odds of at least getting one interview? So the odds, okay. Oh, I already saw the answer, but I would have guessed if getting one interview, I would have guessed a high percentage, at least over 50%. The answer is 61.7%. So I wonder if that's taking into account this new job market that we are in versus other job markets, but still a handy number. Well, folks, on a personal update, we've said it again. New Street Advisory, we're doing more workshops, we're helping more people, allowing people to save, invest, and plan for their retirement. So make sure you tap in with us. Or tell your friends to tap in if they need be, because we're again helping folks plan, save, and do things they need for retirement. Um, New Street Sports, one of our guys, Javarius, is actually headed to the Minnesota Vikings rookie minicamp, which is a great opportunity to show what he can do. And we believe he'll do just that. We have a lot of other guys that are going to potentially get opportunities. And that's what we're doing here is just building and growing something for people and doing things that is a different way that we've seen done. We're proud of that fact of New Street. Now, New Street itself, this is the brand, what we're trying to build, and we have built is continuing to grow. So please stay tapped in and follow along as this journey continues to grow. And we will continue to give this to you every week. So see you next week.